Howdy, everybody. Welcome to Liberty Call for, what is this, Wednesday, February 12th, 2025. Hope you're having a fantastical day out there in the interwebs. It's cold out. It's cold here in Colorado today. I think the high is 7, and earlier today it was, I think, 0 when I looked at the temperature. So it is quite chilly. There's not a lot of sun, and it's pretty miserable outside. So hope you're having a fantastical day. All right. Well, markets are under pressure as hotter than expected inflation data fuels concerns that the Fed will keep rates higher for longer. Oh, no. And the latest CPI report showed a 0.5% jump in January, pushing annual inflation back up to 3%. Meanwhile, CVS Health is rallying after a strong earnings report, and oil prices are dropping 2.5% as Trump talks with Russia hint at a possible resolution to the Ukraine conflict. So before we break it all down, I need some help from you. If you could give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All right. Well, here it is. Let's jump into the markets. Dow Jones was down 0.5%, 224 points, closed at 44,368. S&P 500 down 0.25%, 15 points, closed at 60.53. NASDAQ up 0.03, 6 points, closed at 19,649. The VIX was down 1.06% today. It's at 1585. Canada down 0.27, Brazil down 1.62%, and Mexico up 1.19. In Europe, Germany was up 0.48%, the UK up 0.34%. France up 0.17, Netherlands up 0.39, Spain up 1.07%, Italy down 0.14, Switzerland up 0.02, and Portugal down 0.53. Russian exchange is green again today. MOEX up 0.21, RTSI up 2.07%. And the overnight markets, the Nikkei in Japan was up 0.47%, Australia up 0.6%, New Zealand down 0.87%. In China, the Shanghai was up 0.85%. Shenzhen component up 1.43%. China 50 up 1.1%. DJ Shanghai up 0.96%. Hang Seng up 2.64%. And the Taiwan weighted down 0.4%. All right. So those are the markets for today. Let's hop into our market recap. U.S. stocks recover some losses after CPI jump. Thank you. My guard dog back here decides he needs to scratch his collar. All righty. Let's get into the recap here. U.S. stocks attempted a rebound on Wednesday, but remained under pressure after hotter than expected inflation data signaled that the Federal Reserve is unlikely to cut rates anytime soon. Consumer prices surged more than expected in January, with headline inflation rising 3% year over year, exceeding forecasted 2.9%. Month over month, inflation jumped 0.5%, well above the 0.3% consensus estimate. Core inflation, which excludes food and energy, also came in higher than expected at 3.3% annually and 0.4% monthly. The data underscores that inflationary pressures are proving to be stubborn, just as Fed Chair Jerome Powell reiterated the central bank's cautious stance on rate cuts. Speaking before Congress for a second day, Powell confirmed that while inflation is moving towards the Fed's 2% target, well, it was until they started lowering rates, it isn't there yet, and monetary policy will remain restrictive for now, with rates already cut by 1% last year. Powell emphasized there's no urgency for additional easing. Earnings season continued with mixed results. Cisco was set to report after the close, with investors watching for AI-driven demand in networking equipment. CVS Health surged 16% after posting stronger than expected revenue and profit despite ongoing struggles in its insurance division. DoorDash rose over 2% after reporting better than expected revenue, highlighting strong demand for food delivery. Supermicro climbed over 3% despite cutting its annual revenue forecast. The company reassured investors it would meet SEC reporting deadlines following an earlier accounting controversy. Gilead Sciences jumped 6.6% after surpassing earnings expectations, while Kraft Heinz dropped 3.2% after issuing weak profit guidance due to sluggish demand for its premium price products. What, ketchup and mustard? I mean, what else do they make? All right. And finishing up here with inflation heating up and Powell signaling no imminent rate cuts, investors remain cautious. All eyes now turn to future economic data for clues on when the Fed might finally ease policy. I would venture a guess they probably won't lower rates anymore this year, unless, again, some sort of black swan event occurs, the market collapses. Then they'll be all jumping all over themselves to lower rates. All right, let's get to some data. January CPI from First Trust. This was put together by Nate Guernsey. Let's get into this report. All right. Inflation remains stubbornly high in January, dashing hopes for imminent Federal Reserve rate cuts. Consumer prices surged 0.5% for the month, translating to a 5.7% annualized rate and exceeded consensus expectations. Year over year, inflation remained at 3%, barely below the 3.1 reading from January of 2024, signaling that price pressures have not meaningfully eased. The inflation spike was broad-based, with energy prices climbing 1.1% and food costs rising 0.4%. However, these volatile categories are not the primary drivers of persistent inflation. Core inflation, which excludes food and energy, increased 0.4% for the month, bringing the annual rate up to 3.3%, well above the Fed's 2% target. Housing rents continued to rise at a 0.3% monthly pace, contributing significantly to inflationary pressures. A particularly troubling sign came from the so-called supercore inflation measure, which excludes food, energy, goods, and housing rents. This category, once highlighted by Fed Chair Jerome Powell as a key inflation indicator, spiked 0.8% in January, the fastest pace in a year, driven by rising costs for used cars, vehicle insurance, and hotel stays. With inflation still running hot and no clear signs of improvement, the Fed is likely to hold rates steady until either inflation trends meaningfully lower or economic growth slows significantly. Yeah, that's what I was talking about, that black swan event. All righty. Next up, coming to us via Zero Hedge, at least 70,000 federal workers have accepted buyout offers, White House official. All right, at least 70,000 federal workers have accepted the Trump administration's buyout offer as of February 11th, according to a White House official. The program, part of Trump's broader efforts to downsize the federal government, provides federal employees with 8 months of full pay and benefits in exchange for voluntarily resigning. The buyout program follows Trump's January directive requiring all federal employees to return in-office work and enforcing stricter performance standards. However, the initiative has faced legal challenges. U.S. District Judge George O'Toole Jr. initially extended the buyout deadline from February 6th to February 10th before issuing an indefinite pause. Several unions have sued to block the offer, arguing that it violates the Administrative Procedure Act and the Anti-Deficiency Act. Critics claim that the buyout plan lacks proper congressional funding and does not consider which positions remain essential. Despite legal pushback, the Trump administration maintains that the buyout provides an alternative for employees unwilling to return to office work. Those who decline the offer may still face termination under Trump's broader federal workforce reforms. Additionally, a January 20th executive order seeks to reclassify up to 50,000 federal jobs, making it easier to fire employees in policy-related roles. The legal battle over the buyout and workforce restructuring is ongoing. It's awesome. I did some quick math, and the average federal employee with benefits and salary is about $150,000 when it, all in costs to the taxpayer. So at $70,000, we have just reduced the federal expense by $10.5 billion. That's awesome news. I mean, granted, it doesn't go into effect until they fall off the payroll at the end of the fiscal year at the end of September. But hey, that's some progress. Plus, those people can go out and be productive in the economy as opposed to, being, wards of the state and us having to take care of them. So I see this as a win. All righty. I mean, and secondly, these judges who, I'm sorry, well, you're not allowed to fire these people. It's just, I don't know why federal employees have so many protections around them, whereas the person who pays their salary, the taxpayer, we can get fired at a moment's notice. I mean, all my clients could fire me tomorrow. I'd have to go change oil or something at Jiffy Lube or whatever. But hey, that's just the way it is. If the financial planning world or investment world disappeared tomorrow and was all run by AI, I'd have to find something else to do. That's just the way it is. So anyways. All right. One last article here. This one really grinds my gears. Also from Zero Hedge, taxpayer-subsidized college tuition for illegal aliens, but not for U.S. citizens. Isn't that nice? All right. 25 states currently offer in-state college tuition for illegal immigrants, despite a federal statute prohibiting states from granting such benefits unless they also extend them to U.S. citizens, regardless of residency. This law, part of the 1996 Illegal Immigration Reform and Immigrant Responsibility Act, has been widely ignored because it lacks a private right of action, meaning individuals cannot sue for enforcement, and the federal government has never pursued violations. States like Texas and California openly provide in-state tuition to illegal immigrants while charging out-of-state U.S. citizens significantly higher tuition. 20 of these states also offer financial aid to illegal immigrants. Meanwhile, Alabama, Georgia, and South Carolina have completely blocked illegal immigrants from in-state tuition and college enrollment, while 7 others, including Ohio and Wisconsin, restrict tuition benefits and state financial aid. Legal challenges by U.S. citizens have mostly failed due to a lack of standing. God, it just pisses me off more than anything. It's like if I wanted to sue the federal government because I believe that income tax is unconstitutional and illegal, they'll say, well, you don't have standing. I have to not pay my taxes and then be damaged by the federal government. I basically have to be garnished or put in prison to then have a right to plead my case on why I feel it's wrong. So it's just drives me nuts. Where was I? Courts have consistently ruled that state policies allowing in-state tuition for illegal immigrants do not violate federal law. However, enforcement options remain. The Trump administration could initiate federal action against non-compliant states, or Congress could amend the law to allow private lawsuits forcing states to provide equal tuition rates to all citizens. Well, since these universities know who's an illegal alien, I think the Immigration and Naturalization Service just pull their records, say, hey, Juan, sitting here in economics class, or probably bird calls and basket weaving, you're coming with us. We got you on a plane flight back to wherever you're from. So, all right. Well, that was everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be happy to help. All right. Well, hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.